Good afternoon. Time to have a look at markets now. Shares in Asia largely fell following overnight losses on Wall Street, with the tech-heavy Nasdaq Composite falling. In Japan, the Nikkei dropped 2.1%. Markets in mainland China remain closed for the rest of the week, and they will open on Friday. Looking what's happening in Europe, European stocks rose, with regional investors brushing off yesterday's losses on Wall Street. Stock futures rebounding following a tech-led sell-off again in that prior session. The Nasdaq Composite dropping 2.1% for the sixth negative day in 7, as tech heavyweights such as Apple, Amazon, Alphabet and Microsoft all fell at least 2%, and shares of Facebook dropping 4.9%. Just seen that chart there. We can get it back, just that first chart that you saw, that one-day chart, giving you an illustration at least of what happened as, the social media site was affected by that network configuration. And at the time, it was trading at around $343. And as it continued within that 6-hour power outage, or that's what we at least want to call it at this particular point, that share price dropping at least to about $322. That is the recovery we are seeing, that red line there indicating where it is right now, $326. This is in pre-market trade at this point. Stock is still up at least 19% year to date, and that 5-day chart that is on your screen right now at least gives you a sense of what is happening as the cascading events are affecting Facebook. One being this network configuration issue, but there's also the former employee turned whistleblower who has given a series of documents to U.S. lawmakers, including the Wall Street Journal. So that is the effect that we are seeing, and a lot of these stories that came out through the Wall Street Journal came out at least over the past 2 to 3 weeks. So that is the effect, and we're also seeing a little bit of volatility as well when you look at the 1 month and the year-to-date chart. That is where it is right now, $326. The power effect of that did, however, benefit other alternative, messaging platforms such as Signal and Telegram as a result of that. So it's also going to be curious, rather interesting to see how it performs going into next week. They are still dealing with the revelations that came out of that 60 Minutes interview with that ex-employee, basically talking about Facebook's stance when it comes to their social media and the effect Instagram was having from a psychological perspective on kids. But to talk to us about the rest of the other news that are basically affecting markets right now, we are joined by Martyn Smith from Anchor Capital. Martyn, thank you so much for your time. Let's check in on the JSE. How are we looking right now?
Like you mentioned, there's a couple moving parts at this moment in time. We saw quite a big sell-off across the States last night, specifically out of tech. And I just think there's a general nervousness around not just global markets, but also local markets, because we do take our cue from what's happening offshore. So at this moment in time, still a bit of nervousness. We're a little bit firmer on the day. I think there's a bit of bargain hunting going on. But again, you've got this overhang of what's happening in the States and China. I mean, there's just a lot of moving parts and a lot of kind of uncertainty that's crept into the market over the last week or two. So firmer, but again, overhang of nervousness.
So, I mean, I can understand that, because the last time Facebook had a situation like this was back in 2008, and that it affected about 80 million users. It's a little complicated now because they've got over 3 billion users. And I'm curious to know, how are you feeling about social media stocks right now? I mean, do you hold any? Would you look at them? Would you entertain it?
So, I mean, let's look at tech in general. I think it wasn't just Facebook that sold off quite aggressively last night. It was a pretty broad-based sell-off across the kind of sector. In terms of tech in general, let's maybe do it that way. In the States, I think tech is looking a little bit soft at the moment. In interest hiking environment, tech is susceptible to kind of sell-offs and looking a little weaker on the back of that. So that's not great for them. But I think if you look at big tech, and I include Facebook in this discussion, I think it's looking cheap. I think it's looking attractive. In fact, I think Facebook is actually a very, very compelling buy at these levels, specifically after the sell-off we saw yesterday. So again, not all tech is made the same, but I think big tech is the one that's actually offering some value at this moment in time.
Okay, let's look at the OPEC Plus meeting following, announcement from their side. Was it expected from your end?
I think maybe the market was expecting a little bit more in terms of increasing the supply into the market. They have been facing a lot of pressure. I mean, even the White House is putting a bit of pressure on them to start actually bringing some more supply into the market, because it is obviously affecting the price of crude. You've seen energy actually in general picking its head up across the board, and that's not just from OPEC's side, but you see just a little bit of an energy, I don't use the word crisis, but there's a little bit of an energy shortage across the northern hemisphere as we go into their winter. So you've seen something, for example, like gas up, 300% year to date. So energy prices across the board are up significantly, and from an oil perspective, OPEC being a little less generous with the supply that they're bringing back into the market has obviously increased that price there. So not what we expected, not what the market was expecting or hoping for more than expecting, and it remains to be seen if they're going to buckle under the pressure.
When it comes to the price of Brent crude, how much higher can we go from here? I mean, are you seeing a top at all?
Again, I think it largely depends on what happens with this kind of energy crisis or energy shortage, and depends on what OPEC does. So I could see it elevated for longer until we see some kind of resolution from here. How much higher does it go? I'm not too sure, but again, we need to see some levers pulled before it comes down.
Yeah. So we've been talking about the inflation, debate, and some even hinting at the possibility of stagflation, although we don't know where that is right now. When it comes to the Fed policy and the idea around the inflation debate, where did you sit when it first started emerging that perhaps from the Fed's point of view, the inflation was transitory? Some economists were saying it's not transitory, as the Fed seemed to believe. As that debate heated up a month ago, a few weeks ago, where were you in terms of that debate?
It's an incredibly interesting debate, and we've always been on the side of the Fed to say that it's transitory, and I think the reason why it seems to be lingering for a little longer than people have been hoping for is because you have things like the Delta variant coming on board and other supply side issues that just kind of are cropping their heads up or picking their heads up a little bit over the last couple of weeks and months, which is making inflation last a little longer than initially anticipated. Because if we look at it fundamentally, so let's do this. Let's first look at it fundamentally and then the psychological kind of things that go in terms of inflation. So fundamentally, if we look at it, it makes sense. You've got supply side bottlenecks, you've got low base effects that need to come, like things like airfares and secondhand cars and things need to rebase. You've got supply side issues that need to normalize. Once those things happen, it is then, in my opinion, transitory and things will kind of normalize. But you've got the psychological aspect to inflation as well, which makes it one of the most difficult things to actually forecast in the world. Because think about it, let's use an active example. If you've got a shopkeeper who now thinks that, oh wow, inflation is going to start to happen, and you start increasing my prices because my staff are going to ask for higher wages, and then people start doing that, it becomes a kind of self-perpetuating cycle, and it becomes quite sticky and quite difficult to pull out of. A prime example is, think in South Africa, if you think about how much your salary should increase, everyone goes, 6%, because that's inflation. But we haven't been at 6% inflation or CPI for the better part of 2, 3, 4 years, right? So it is quite a sticky thing, and it can become quite a self-perpetuating cycle that eventually will force structural changes in the economy, and people be like, oh, everything is starting to increase. So interesting. I'm still on the side of transitory, but there are kind of risks there.
You're going to go down swinging, aren't you? It's okay. It's okay. I will give away my position. I did not believe that inflation was transitory at all. And suppose one day we can have a special show where we have all our experts and we can debate various economic issues. That is Martyn Smith from Anchor Capital giving us a breakdown of what is happening and also sharing his view on certain economic topics. We're going to take a quick break.